So the main types of financing that we're talking about, we've got cash, and cash is king. If you've got cash, you can show a bank account or a different account showing we've got X number of dollars there. We are willing to pay this much money as long as the amount in that account is higher than what the purchase price is for. That shows you're very likely to close because you have the money already. You don't have to get a mortgage company to approve you. You already have the cash. You're ready to go. That's going to be the strongest, and that's why it's at the top. The next is a conventional mortgage. This is what we say kind of a stereotypical, I wouldn't say stereotypical mortgage, that's not the right term, but conventional mortgage, most mortgage companies offer these. This is going to be for people who have decent credit, maybe some established credit, usually putting a little bit more down. Some conventional mortgages allow as little as 3%. Most are a minimum of 5%, but it's usually recommended to do around 20%. If you can do 20%, you can get it for less, 10% or whatnot. But if you've saved up enough, you've got 20% that you can put down on a house, you've got decent credit, you may qualify for a conventional mortgage. This is usually the strongest type of mortgage product. And that's why it's second in line here. If a seller sees that you are going to be using a conventional mortgage to purchase, someone's using a different type of financing, a little bit lower on this list, conventionals tend to come in a little bit stronger. FHA mortgage, this is usually for first-time home buyers or people who've maybe had some issues with credit or haven't had credit. It may not be that you had credit issues, it may just you've never used credit before. And so these FHA mortgages, they're through HUD, they're HUD backed, and they usually allow you to purchase a home for as little as about 3.5% down. They do have some requirements for the condition of the home that a conventional mortgage usually does not. And so that's why there can be a little bit more restriction on that in going forward there. They also tend to take a little bit longer to close. Conventional mortgage, usually about a month. That's usually our benchmark or kind of our idea. FHA mortgage, usually looking at about 45 days. VA mortgage, this is a mortgage that's specifically designed for veterans or active duty military or National Guard members with certain requirements. These usually require as little as 0 down. Doesn't mean there are no costs, but you don't necessarily have to have a down payment. And these also, VA mortgage also requires a certain minimum condition for the home. Rural development, this is similar to VA and that usually doesn't require any money down. And so that is something that could be an option. It's usually restricted based on geography. It's got to be in a designated rural area, which sometimes some cities actually fall within these rural development areas. I don't know why they choose what they do, but it's something to talk with, again, your lender, your financial institution, to kind of see what you would qualify for.